It's the question on the minds of many tech entrepreneurs. What is happening in venture capital markets and when will the situation improve? Valuations are down, funds are having a difficult time raising money, and companies have no choice but to stretch their runways. Meanwhile, there's excitement around disruptive innovation in deep tech. Looking for some insights? Keep watching for more in this episode of Techopia Live. Hi, everyone. I'm Michael Curran from the Ottawa Business Journal. Welcome to another episode of Techopia Live. This is a regular podcast from OBJ that features interviews with executives who impact Ottawa's tech ecosystem. We got a few things on our mission statement here. We want to share knowledge to create a deeper level of understanding about what's happening in the local tech sector. We want to explore issues, that's kind of today's episode, by the way, that are common to local tech firms. And three, we want to help level up Ottawa's tech sector. Thank you for tuning in. And if you're enjoying the podcast, please give us a like and a share to help expand our Techopia community. All right, let's talk about today's show. It's going to be a really good one. We've got two, not one, but two guests lined up, and they both hail from a very well-known Canadian Crown corporation that plays an especially important role for Canadian entrepreneurs, and that's particularly true in the tech sector. You might not realize, but this Crown Corp is actually one of the largest and most active venture capital investors. So they make active investment in local technology companies. There's a long history of that in Ottawa. I've talked to many CEOs over the years that have benefited from their relationship with this Crown Corp. And in this show, in particular, we're going to explore a recent report on venture capital investment trends, and we're going to talk about a special fund that is directed at deep tech. Let's welcome our guest now. From BDC, here is Sumita Banerjee. Hey, Sumita.
Hi. Nice to be here.
Good. Yeah, it's
thanks for inviting us.
Yeah, happy to have you with us here. And you've got a colleague, here he is right now, also from BDC, is Tom Park. Hey, Tom.
Hey, thanks for having me on.
Thank you for joining us. And Tom is actually close to Ottawa, Stittsville.
So it still counts. It still says City of Ottawa on my taxes.
That's true. And you're close to Canada, so we know there's lots of tech companies there. Sumita, you're joining us from Montreal, I think.
Correct.
Yeah, that's great. And let's jump right into this, Sumita. I'd love for you to introduce yourself to our audience. So a little bit of personal, professional background, but also what you do at BDC. Take it away, Sumita.
Thanks so much. Well, as you mentioned, we're part of the team at the BDC Capital, which is the investment arm of the Business Development Bank of Canada. And we have about $6 billion under management as part of our platform. And we, invest across the full spectrum of capital from seed to growth equity. And as you mentioned, we're one of the most active venture capital investors across the country. So we have early stage investment funds such as Seed Venture Fund, Thrive Venture Fund, Sustainability Venture Fund, Tom's Fund, the Deep Tech Venture Fund, Industrial Innovation Venture Fund, Climate Tech Fund as well. And then also on the late stage side, we have the Growth Venture Fund and the Growth Equity Partners Fund. And then we also have colleagues who run from our funds team who play a leadership role investing across world-class Canadian venture capital and private equity funds. And then out of our investment platform, we also manage the Venture Capital Action Plan and the Venture Capital Catalyst Initiative, so VCAP and Vicky to those who know, on behalf of the Government of Canada, and that's has its ambition to support and mobilize and catalyze the venture capital industry in Canada. So specifically myself, I sit in the Insights and Strategic Initiative team, and so our role in this team is really to support new initiatives that are coming out of our platform to serve any gaps that we see in the industry. We're constantly working with stakeholders and partners to develop the ecosystem, looking for ways to bring value beyond capital. And one of those ways is through thought leadership and hence the Venture Capital Landscape Report, which we actually use as a bit of a feedback loop, right? To speak to the community and get a sense of what's going on in the ecosystem and to report on what's going on in the ecosystem.
Wow, that's a lot. Oof, that's a lot of activity, and that explains why I see your colleagues running all around Ottawa. A couple offices, the downtown office, the Canada office is still there, I think, Tom. Yeah,
It's moved,
uh,
to Wesley Clover,
that's
near
it.
Terry Matthews'
Yeah,
office.
Canada's largest technology park, as we like to say. Thank you, Sumita. And Tom, let's go to you. You're in Ottawa, and you deal with something, Tom, called a deep tech fund. But I'd like you to introduce yourself and then tell us about that fund.
Yeah, so I'm originally from Montreal. My family and I just moved to Ottawa about 2 years ago, so we're very happy to be here. We have a 3-year-old, and he's starting at Claudel next week, so we're very excited. So we're building roots here. So, before BDC, I used to work at McKinsey. I used to work at the Gates Foundation, and the BDC has been a great home as we were looking to come back to Canada. So, a little bit about my fund. It's a $200 million early stage a deep tech venture capital fund. So what do we mean by deep tech? So we look for startups with a higher technical risks than one would normally see in middle of the fairway VC investments. So we focus on semiconductor, foundational AI, quantum computing. We have about 11 companies in our portfolio, including one Ottawa-based company called Info that does photonic interconnects. So we're a great fund for a great city in which that has a spike in the technologies that we're looking at. And Ottawa spikes in telecommunication, semiconductors, cybersecurity. So these are kind of the fields that we look at. And I'm also a member of the board of directors of the Canadian Venture Capital Association.
Wow, I did not know about your local portfolio company, so we're gonna book them right after we finish this.
Yeah, absolutely.
Because we gotta talk to them. That's a bit of a new name for me. Sumita, we're going to come back to you. And, in all my years speaking with tech CEOs and startup entrepreneurs, I mean, oh my gosh, venture capital is so much part of the conversation. This type of capital is the lifeblood of these pre-revenue companies. And as I understand, BDC's recently completed a trends report that looked at 2023. You might even have some 2024 stats for us, but
Yeah.
tell us about the report in general, and then we'll get into the details.
Wonderful. Thank you. Yeah, so the role of our team, as I mentioned, from a thought leadership perspective, is really to think about what we can give back to the community and to the investment team community, as well as to entrepreneurs who are looking to understand what's going on in their market. And so our report is really a flagship publication that we work on every year, and it provides like an in-depth overview of what's going on in the ecosystem. We feel as one of the most active investors, by investing directly in companies and as well as through third-party managers, that we have a wealth of data that would be valuable to share with the market and with the community, so that it can be providing a sort of an equilibrium to everyone to get data-driven analysis and then make thoughts and decisions around all of that information. So in this report, we have some unique data that we don't think is available through others, primarily performance data that we share and that are used by multiple managers in the market to assess themselves or compare themselves or rank themselves, and that they use perhaps when they are even fundraising. And we have done analyses on different types of topics. We've done dry powder analysis. And then this year, more recently, we've done an analysis on regional activity. And so that is a report that came out in May of 2024 and is retrospective to 2023.
And give us some of the highlights. I got some of the headlines here, and they seem to be consistent for what I'm hearing. But maybe the first stat that kind of occurred to me is that the number of deals in 2023 when compared to 2022 was down about 13%, and the dollars were down about 34%. But tell us more about that year over year activity.
Yes. Yeah. Thank you. So exactly that. I mean, we're really at a moment in time where the venture capital asset class in Canada is living a correction, and it's trying to find its path and its foot to a future which is a sustainable growth trend. We had a couple of outlier years during 2020 and 2021, and then we've started decelerating since then. We are remaining above the 5-year average from a pre-pandemic perspective. So if you take the 2015 to 2019 era, we're I would say, trending positively from there in the way that we would expect, and that seems sustainable. But yeah, so year over year, as you pointed out, those were the correct data points on that. And so it's a reset. We're seeing a deceleration of deal volume, dollars invested. Valuations have come down as well. It's been a challenging fundraising market, and it's been difficult for both entrepreneurs and fund managers to raise capital. And the stages where we're seeing that particularly being hit are late and growth equity stages, and those companies also raise the most capital. So that's been a particular difficulty that we've seen in the market. And the ongoing reset is impacting performance. As we talked about, valuations have come down, and that's being tempered by the market outlook. So we're starting to have we've looked at the 10-year IRR year over year, and this has come down, and it's still in double digits, and we're watching it closely to see whether it falls below those double-digit marks. The 1-year IRR was negative in 2023, and so the reason we remarked on it in the report is just, once you have an asset class that has sort of that negative trend and maybe dipping below double digits, it could provoke some investors to step back from the market. And so we've been keeping a close eye on that, I would say. But there were some positive signs that we saw as well. There's a resiliency in the market. There's been long-term progression. I talked about how last year compares in terms of dollars and activity versus those periods outside of the outlier years. So we had a slower decline in activity compared to global markets, and that was looking at the trends that are happening around the world. And we've noted a maturing industry in terms of the number of active GPs that are in the market. And more specifically, what's been very positive is the number of managers that are moving from first-time managers to emerging and then to established. And the established number of GPs continues to grow year over year, and that's a very positive trend. And we're narrowing the gap on performance against our US VC counterparts, which is, I think, something that Canadians always like to hear. And we also had positive activity from foreign investors. So this is the second year we've noticed a 50% plus number of transactions that had foreign investments. And we're continuing to see a lot of foreign interest in the Canadian venture capital market. And I know Tom has that opportunity to talk to others who are paying attention to our market, and even wanted to note the fact that Kaufman is coming. The Kaufman Summit is coming to Montreal in 2 weeks. And that's the largest gathering of global VC investors, right? And so I think a really great indicator of others noticing how our asset class is maturing. And so those are at least some silver linings in the cloud of a little bit dark clouds on the horizon that we've seen from 23.
It does seem like dark clouds. Again, when I talk to some startup CEOs and kind of the established players, they're, stretching their runway, and sometimes they're laying off staff to kind of reduce costs because the valuations are low and they're not sure where they can come back. Yes. Just to kind of wrap up, maybe one final question about the report. If you were speaking to, I guess, as we are, some local tech leaders here, what would your advice be to them in terms of the overall trends that they might see in 2025 and beyond? Do you have a sense of that, Sumita?
Yeah, so far for the first half of 2024, we still see activity in the market. The first half of 24 is a little bit below what the first half of 23 was. It's about 16% lower in terms of dollars, and 25 or 23% below in terms of deals. But nevertheless, it's still active market with a lot of investors just, I think, playing it safe. And so what we've advised a lot of our entrepreneurs and talked to them about has been about making sure they have all their ducks lined in a row. Talk to your investors early about what you need and how you're trying to get to your next steps. Work on achieving your milestones. And those are the types of things that bring investors back. And showing them that you're achieving progress is sort of the key, I think, to securing your investors' interest in continuing to help you grow.
Some good advice there, and we've had some previous episodes on being investment ready. We've talked to people like Susan Richards from Number Crunch and that. Listen, Tom, I'm super keen to get into the Deep Tech Fund here in a second. Just before we do, Tom, we're going to pause for a second and recognize the sponsor of this episode. Also a financial institution that's complimentary, by the way, to BDC. Here's a message from TD Bank. TD's relationship team is committed to your business. They take the time to understand your business and provide banking solutions that can help you achieve your business goals. A dedicated local team allows for deeper customer relationships and better service. They take the time to learn about your business and industry so they can react to changes in the marketplace and anticipate your business's evolving banking needs. Your relationship team can also connect you with other specialists at TD to help move your business forward. And once you're up and running, TD continues to actively manage your relationship, looking for ways to help grow your business. Learn more at tdcommercialbanking.com. Okay, we're back talking with Sumita Banerjee and Tom Park from BDC. And Tom, we want to bring you in now. Let's talk deep tech. So you gave us kind of the Coles Notes version of that, but let's explore this. I mean, maybe why is it even necessary? Maybe start there for BDC to have a guess. But why is it necessary for BDC to have a deep tech fund? Tell us about that.
Yeah, so the big gap we're trying to solve is the commercialization gap in Canada. So we have outstanding research, R&D capability. The country is home of 2 Turing Award winners here, right? Jeffrey Hinton and Joshua Bengio. Where we're not great at, Michael, is commercialization. So just in terms of, I think the OECD had a report in terms of innovation outputs. They measure that in terms of patents, for example, trademarks. We rank in the bottom third, or if not in the bottom quarter in the OECD. And so that's what our fund is trying to do, especially in those startups that are doing hardware, some of the more advanced software kind of deals. That's why our fund was created just during COVID.
Okay, and how would you identify those prospects? I suspect it's through BDC's vast network of connections and that type of stuff. But tell me a little bit more, Tom, about how those companies would be identified and then how you work with them. Tell us more about that.
Well, what's great is, for example, let's talk about here in Ottawa, right? So I do spend quite a bit of time with the Spark team and Terry Matthews. So I looked at their portfolio. We spend quite a bit of time with the University of Ottawa, Carleton University team. And we also work quite closely with the different government agencies here. So one of the big strengths of Ottawa, it's home to SDTC, ISET, so these departments that have great relationships with different kinds of startups with the different programs. And we go back and forth as well with them. Other ways is that we kind of have an understanding of what the market's looking for. So, for example, I co-chair the Global Defense Council, which is an industry council of 12 of the largest defense primes in the world, including Raytheon, Lockheed, and 3M. And so they tell us, like, these are the technologies that we're looking for. And that also helps us to narrow in. And that's how we were able to find that info that was formerly ELPHIC.
Okay, and that sounds like a path to commercialization, which has been the challenge for so long, and Ottawa kind of plays into that because we have a long history, as you know, Tom, of being a research and development, and certainly we have commercialized many companies, but the general sense is, we could do a much better job of it. So when you identify someone that might be investment worthy, Tom, what would it look like to bring them on board, have those discussions, and actually make the investment? Can you tell us more about that?
Yeah, absolutely. I think the key to understand is that the business model that worked before COVID is obsolete today. So before COVID, it was grab market share and will fuel the growth through cheap capital. Today, capital is no longer cheap. The big tech companies like AWS, Microsoft have much better product offerings, including in AI, and IT budgets are being cut. And then there's all these open source LLM models where essentially that many of the tech differentiation the barriers have been reduced. So it's not hard for even BDC, let's say, to go on Anthropic, train an algorithm with our own data rather than work with a startup. So what we'll be looking for now is essentially a startup with a deeper technical moat. So if you're an AI company and you don't own the data, you better have a very compelling value prop and team. And two, do you have the management that knows how to build a company from 5 employees to 100 to 1,000 employees, and there's a clear path to a revenue to 100 million?
Yeah, I was at the Angel Investor Summit at the National Arts Center in Ottawa earlier in summer. You might have been there too, Tom. And one of the things that really struck me, it's a little bit of a tangent, but it's relevant to what we're talking about, is how AI in some instances is complicating the job for people like you to sort out the wheat from the chaff, as they say. What's real, what's not real, and the recurring message was, if you don't own the data, then you're nowhere. Does that sound right to
Exactly.
you, Tom?
It is possible with new kinds of algorithms where you can train the algorithm early on through human in the loop, and there's different technologies, but you have to have a very deep industry expertise. So if
Okay.
you are an AI in warehousing, for example, you better have worked in a warehouse and such.
You need That's exactly it, right? You need that kind of vertical knowledge in that. And I don't want to move. Oh, Sumita, we're going to come back to you in a second, but I would be remiss if we didn't bring up the Ottawa portfolio company that we're going to have a whole episode on. But
Mhm.
give us a quick sense, Tom, of what they do and why you thought they were worthy of investment.
Yeah, so they're formerly known as Elfake. We brought in a renowned founder, Joe Costello, from Silicon Valley to be the CEO. But essentially, they're solving a big problem, which is that the data centers, the demand for processing within data centers is being limited, particularly by the different interconnects happening. So it's a photonic interconnect startup, and it's very tough technically, but they have an outstanding team, and essentially they're based here in Canada.
Okay. That sounds like a Canada company.
It sounds like it can.
We've got deep roots, and I say that in a loving way, of course. Listen, everyone, I'm sorry to say this, but we kind of run out the time. It seems like we just started talking 2 seconds ago, and we're nearing the 25-minute mark. So, listen, before I wrap up, though, Sumita, we're going to give you a chance for our EY Building a Better Working World, and this segment is brought to you by EY. Here it is.
So, how I'm building a better working world and how all our colleagues here at BDC are building a better working world is by embodying the values that are part of being a development bank. Thinking about how we can support innovative entrepreneurs and bringing to the table ways that we can generate impact across the country. And one of the key areas of focus at this stage is seeking to find different ways to bring capital, resources, networking, how to catalyze those who are in underrepresented regions, underrepresented communities, underserved sectors.
Great answer, Sumita. It sounds like a better working world to me. So thanks for sharing that. And I've got a question for both of you before, so don't disappear here. Sumita, what I wanted to ask you is, again, so many of the conversations I have with people in Ottawa, they're so curious about what's happening in venture capital, and they get mixed messages. How can they tap into your resources at BDC to have a bit more of an analytical sense of what's happening from a trends perspective?
So all of the thought leadership that either my team or other teams here at BDC produce are available on our website at bdc.ca. And they can always reach out to different colleagues. We're all available on all the social media networks and available on the BDC website as well. You can just reach in and find any of us who you think might be a resource and ask us for what you need. And we're always here to help.
That's awesome. And for you, Tom, before we bid you adieu, just curious about any sense of what deep tech in specific technology will be kind of the kind of the resounding success story in 2025 and beyond. Do you think quantum is going to take a step forward? I mean, obviously we're AI is on the tip of everyone's tongue these days, but sometimes I sense like it's very hard to find a good AI investment story. But what if you were to gaze into your crystal ball, I guess is what I'm saying here, Tom. What do you see in 2024 and the better part of 2025 from a deep tech perspective?
I think for 2024, the story about Gen AI and the hardware and the NVIDIA killer, et cetera, that will continue. The quiet transformation that's happening right now is the changing in the North American supply chain. So, for example, some of our startups, we introduced them to some Mexico, some factories in Mexico, and companies like Foxconn intend to triple their workforce in the next 2 years. And so technologies that focus on robotics and AI or advanced manufacturing and such, I think that's going to be that'll be what'll be really hot next year.
That's a sweet spot. Okay, that's super useful for you to share that with us. So listen, Sumita, I want to thank you for your time and your time as well, Tom. Great work at BDC. We know it's Canada's entrepreneur bank, and I know so many entrepreneurs, especially from the tech sector, rely on BDC. So thanks for everything you guys do.
Thank you so much for inviting us.
We'll see you guys. All right. That was Thomas and Sumita again from BDC. Before we wrap up, we want to take a look at some of the other companies that champion our Techopia project. Here they are. Techopia is brought to you by many great sponsors, such as EY, building a better working world. Number Crunch, offering virtual CFO services for SaaS companies. Pearlie Robertson Hill and McDougall, a leader in business and technology sector law. TD Bank, specialized programs for technology companies. The University of Ottawa Faculty of Engineering, creating the next generation of technical talent. Techopia is not only a podcast, we post new articles daily at obj.ca/Techopia. And if you're on YouTube, please subscribe and click the bell icon. All right, a couple housekeeping notes before we wrap up here today. So one point is just to look back at this great annual magazine we produced in cooperation with EY. It talks about a lot of the great companies that are working to build Ottawa's technology sector, explore some of the challenges. We got this great ecosystem map. We have some industry listings. Anyway, the point is you can go find that at techopiaeyinsights.ca. You can get the digital edition. The printed version is pretty well out in the city. If you find one, you're lucky. I also wanted to give a shout out to some of my colleagues at OBJ that are behind the OBJ Insider subscription program. So something we launched about a year ago. And this is a way of continuing to fund our local business journalism, and in particular, our technology journalism that we've been doing for almost 30 years now at OBJ. So I encourage you to go to obj.ca/subscribe. There's some great benefits, including access to exclusive online content, access to some exclusive email newsletters. You get the printed copies if that's what you want, mailed to your office. Some are great specialty pubs like the Book of Lists, EY Insights, and our business growth survey. So lots of value there. Reminder, go to obj.ca. That's all the time we have for today. Thank you for watching and or listening. We hope Techopia is keeping you connected and informed. Let's keep building Ottawa's technology utopia. That's Techopia. See you soon. Bye-bye.